Hello, Shania. Hello, everyone. Hope you're doing well. Okay, that's fantastic. And just one remain thing. Hello, Rachel. Good day. Do you guys can see my screen as well? Is it visible to everyone? Okay, that seems perfect. All right. So, welcome everyone to this webinar regarding the macroeconomic data. We have been in a session before in another workshop speaking about the key economic indicators and what are the relationship between these indicators as well. So today we're going to speak a little bit on how to interpret these data from the economic calendar. And luckily that we have today, after 30 minutes from now, we do have a very important news that's going to be released, which is the CPI, the core CPI and the CPI as well. They are going to be released after 30 minutes. So we will see what's going to happen. We will try to interpret that together and let's see how the market will respond to that. All right. So before we start, as usual, I would like to ask you guys the same question on every webinar. So I will be releasing a two polls, and I would like you guys to please reply and answer these polls. Okay, so I'm asking very basic question. Your level in trading. Okay, perfect. So we have the majority have responded. We have till now we still have seven to respond or eight around. Okay, perfect. So we do have 69% beginner level, 71 increasing. Now there is no much difference between the beginner and intermediate, but it depends on actually if you are really trading. Now you will know that the intermediate will be in somehow the break-even benchmark. So this is the definition of a intermediate, I would say. Okay. Anyone else? Or should we jump to the next question? Beginner level, and we have intermediate level of 33%, which is super fine. Perfect. Okay, guys. Another question that I would like you guys also to let's end that. Another question is do you guys, whenever you guys trade, do you prefer to trade the news or this is something that you don't like to trade it? Mainly in this webinar, we're going to speak about news trading. Okay. Do you think news is a factor to consider when trading? So some people are saying maybe, yes, 20%. Let's see how it goes. And I'll ask you this. I will interpret that question. Never use it, but it's important. Okay. Okay. 63%. Okay, so we can see here that we have 65% are saying yes, it is really important. It's a key factor when trading. 12% are saying no, it's not important. Maybe it's a 24%. Okay, perfect. And I can see also in the chat box, never used, but it's important. It can be volatile, so good to know when and what. Perfect. Okay, guys. So in this topic, we are going to speak about the news. Okay, and definitely the news are the what is happening in the economy. Okay, so we are going to speak about the core economic indicators. We're going to predict the market with confidence. And I will just, add my comment to the second point. trade smart and avoid data traps. Now, the second question that I asked you guys, which is, do you think news trading is important, or knowing what is happening in the market is important in order to, become a profitable trader or not? Now, the idea here, and let me be honest with you, this is my perspective. Again, this is not something that is 100% guaranteed. This is a trader perspective, okay? I only trade, when the market does not have any news, okay? Because remember, in some of other webinars, I spoke to you guys regarding the importance of having a trading plan. Importance of having what? A trading plan. And I told you guys that if you don't have a plan, and some people think that the trading plan is have a strategy. Now, the trading plan is composed of three things. Okay. Number one is definitely what is your strategy. Number two is what are you going to trade? So, what's the asset class? Okay, because not all of the strategies, okay, are suitable for the asset class that you are trading. So you need to understand the behavior of what is your asset class that you're going to trade. Number three, when you are going to trade, when are you going to trade? Which means you should have a timing plan or a time plan. When you are going to take your trade, when you are going to open the chart and look what's happening in the market. Okay. Now, when my answer was clearly because I need to chase the timing in the market where there is a volume. There is a volume. Now, here is the misconception. Volume differs from volatility. Volume differs from volatility. So every single day, when the market opens, okay, so the market opens every single day, right? We have three sessions. We have the Tokyo session, we have the London session, and we have the New York session, right? So any time of these sessions, when the market opens, there will be a volume. Okay. Now, volume means that you are going to see big candles when the market opens, a candle like this one. Okay, big candles moving and moving and moving, candles like this, right? And I told you guys now it's really important that when I place my trade, I don't want to stuck in this trade for a long period of time and I don't know what's going to happen because if the candles are so small going up and then going down and so on, if the market is consolidating, this means that there is no volume in the market. There is no one is able to, be the winning party in this time, right? So in order to define the best time, you need to trade when there is a high volume. Now, should I trade when there is high impact news? Now, in the high impact news, there would be a volume and there is going to be a volatility. Okay. Now, volatility does not mean that we are going to have big candles like this. Volatility simply means that when the market goes up like this, the market, as we can see, when there is an interest rate decisions or there is a CPI, as we have just 20 minutes remaining, or NFP. I remember that we have last Friday, we had the NFP. The market might, when the release happened, the market might drop like this, very huge, big candle like this. Okay. And you think that, okay, then everyone is selling because the data is positive on dollar. So if we're trading gold, I'm gonna sell, I'm gonna short because I can see that. And before the candle closes, what you can see is that all of this entire candle again ended up closing like this. You have a big wick like this. And the next candle opens, right? Candle like this, and then the market again goes up and then it drops back again. So the volatility measures how far we are going or how fast is the market movement up and down. There is no clear direction, right? So news trading, okay, you should be prepared that it is only suitable for who have high large capital or high capital. Okay, number one. Number two, for people who are professional. If you are considering yourself as a professional trader, then because one thing is going to happen, the loss is going to be huge. The slippage that you're going to maybe exposed to, it's going to be huge. So you might be losing more than your stop loss. Okay. And you might enter a position on a certain price because of the high volatility. It's so fast, your position might be open on a different price. Okay. So all of these things, it is the effect of volatility, is the effect of news, right? So actually considering the news, it is important, but it is not the key thing that I should consider when it comes to trading. When it comes to trading, we have two things. We have a part of the technical analysis, which is your strategy, and the part of the fundamental analysis. Now, the fundamental analysis is the news that you have, right? The news that you have that's going to be released. For the technical analysis, this is every single day. Every single day we have support, we have resistance, we have the trend lines, we have the break of trend lines, we have the whatever, if you are older, all of these things, it's happening every single day, right? But when there is a special news that's going to be released, all of your technical analysis, it might be destroyed. Because at that time, the market is not going to respect the zones. There is no respect of zones when there is a high volatility time in the market, right? So we need to consider this. Now, the news is important. We should know when the news is going to be released, but I'm not going to only focus on the news when it comes to trading. This is totally wrong. Okay, because believe me, the losses are going to be way much more bigger than your profits. Yes, you can make a profit from that, maybe once, maybe twice, because I told you guys that I'm going to comment on point number two, which is predicting the market with confidence. Okay, no one can predict the market direction with confidence. It's impossible. If I could do it, okay, and if anyone could do it when there is a high impact news, I think I would be having be the richest man in this world. Okay, no one can do that. Okay, so we just need to agree that predicting the market with confidence when it comes to news, this is something that no one on the earth know about it. Okay, we are going to interpret the data, but you don't know how the market is going to respond to these data. Okay, is the market going to respond logically, or the market is going to respond on another way, right? Because it happens. Okay, so now if we need to speak about the key economic indicators. Now, we spoke earlier about the key economic indicators, and we said that any economy can be evaluated if I want to know the performance of an economy is doing well or not. The performance of an economy can be determined by three main factors, and these three main factors or indicators, all of them, when it comes to news, they are going always to be high impact news. They're never, ever going to be, low impact news because this is the economy, this is the direction, right? So number one is the GDP. And when we speak about the GDP, this is the entire performance of your economy. Now, if the GDP, so let me explain what is the GDP. The GDP is the output in a very simple way. This is the output of an economy. Now, every single economy, we do have labor, we have lands, we have capital, we have entrepreneurs or leaders who are running these projects on the ground, right? So this is the resources that any economy in the world has. Now, some economies, they have a lot of these resources. Some economies, they don't have these much resources. That's why you can see China is having a lot of labor, they're having a lot of capital. Capital here does not mean money, guys. So when we speak about the perspective of economy, capital does not mean money. Capital does mean machines, technology, okay, innovation. This is known as capital, right? And the capital can be definitely the capital, which is machines, and the human capital, which is the quality of labor that you have, right? So the output that we're producing, Okay, so if we want to produce two boxes, okay, then you should be having some, labor or people employed to produce this, right? Either machines, people, but anyhow, if there is a machine or there is a people, this is gonna affect your output. Okay, if you have more labor, then the production is gonna be more. If you have less labor, the production is gonna be less, right? Good. Now, definitely, if I want to increase my production, okay, then you should hire more people, right? And hiring more people is going to lead to people who are not working or people who are looking for a job and they're not able to. This is the simple definition of unemployment. Okay. So if I want to produce more, then I need to increase my labor. Now, increasing my labor means that anyone who is not working, who has a source of income of nothing, zero, this person who is a newly hired, he is having now some amount of money because he's getting income. When the person gets income, the inflation or the prices are going to increase. The inflation or the prices are going to simply what? Are going to increase. Why? Because inflation has two factors. There are two reasons to cause the inflations. Number one, something from the economic academic books, we say it's a demand pull inflation. What does it mean? It means that this inflation, the main reason behind it, it's the demand. Okay, so the demand comes from people are having money. So when people are having a lot of money, they will spend more. Spending more, it means that you are demanding more. Demanding more, it is going to lead the prices to go higher. Okay. The other reason is the cost push, not demand pull. It is cost push. Now, the main reason here behind this inflation is not the demand. People are not having money, but here is the cost. The cost of what? The cost of raw material, the cost of labor. Okay. So cost of labor, okay, cost of raw material, if I'm selling some boxes or whatever. Now, these boxes are made of some certain materials. These materials, it might be imported from other countries, and the other countries are imposing high tariffs. So this tariff is going to be reflected on the price, on the cost of these raw materials. So at the end of the day, before these tariffs has been imposed on this single raw material, we would have sold this for 50 bucks. But because there is a new tariff has imposed on this box or this raw material, so we are not able to sell it at 50 because the raw material now becomes expensive. So we are going to sell it at $80. Now, once people come and ask about this box, okay, they would say, oh my God, now the price is 80. Yeah, but as a producer, I don't have control over that. I cannot control this because the raw material has increased and I am a producer. I have a firm or I have a factory that is made in order to maximize my profit. I'm not a charity. Whatever the price is or whatever cost it is coming to me, I'm going to transfer these costs to you as a customer. So you're going to pay higher money or higher prices. Sorry. Okay. So just to recap on this, GDP, when it goes up, unemployment is going to go down, inflation is going to go up. This is the normal case. Now, inflation going up, it doesn't matter, but it shouldn't be going up every single month. It should be stable. Okay, we don't mind if the economy is growing and people are working and the inflation is going up. Okay, it doesn't matter at all for people because the economy is growing. We will find jobs, we will have high salaries, the companies are going to do well, and so on. But it should be at least stable for a period of time. Vice versa, if the GDP goes down, this means that we are not doing well as an economy. So this is going to lead the unemployment to go higher because there is no production. I'm not producing. I don't want anything to produce. Then why should I pay a salary for you? So I will say you will be laid off. So the unemployment increases. This means that people now they lost their source of income. They lost their money, right? So there is no money. When I don't have money and I don't have a job, I don't think that I will plan for a vacation. I'm not gonna go every single day. I'm not going to buy from, restaurants and so on. I will try to save as much as I can in order to survive until I find a new job, right? So when I save, I don't spend. So when I don't spend, it means that I don't demand. When I don't demand, this means that inflation as well is going to go down. Okay, guys? So guys, is that this very simple concept now, the key economic indicators, is it clear for everyone, or do you guys have any questions related to that? Any questions so far? Hello, guys. Any questions? All good? Guys, can you hear me? Okay, perfect. Now, when it comes to the inflation, unemployment, GDP measures, okay, now GDP is fine. That's GDP. Now, unemployment, okay, this can be measured by different things. Okay. It can be measured by the NFP. In NFP, it is a measure that is measuring how many persons of the labor force, okay, are not able to find a job, removing or excluding from this calculation the government officials or the senior positions or anyone in the government sector. Okay, so we're just gonna focus on the normal individuals, and that's it. Okay, so we're going to exclude the farmers, we're going to exclude the governments, okay, from that calculation. Okay, now this NFP is important because it tells you purely how many of your labor force are not able to find a job. Now, this is one thing. Okay, this is related to unemployment. The jobless claims. Okay. Now, jobless claims as well, it is a measure of, or I can indicate, it's not an official, I would say this is not from the economic books. There is nothing called jobless claims, but let me explain how it works. Because some of the developed economies, when people are not able to find jobs, government should compensate them. So this is fall under the government expenditures. Okay, this is government expenses. So government, they have a budget and they have allocated some amount of the budget for the people who are not able to find a job. This is something normal for the developed countries, right? So if people are asking for a lot of claims, I need my claim, okay, or this number has increased, this means that people are asking for more money from the government, right? Because they are not able to find a job, which also it's an indirect representation of the unemployment. Okay, so NFP, jobless claims, they are measures of unemployment. Okay, now in normal other countries apart from United States of America, you'll find very normal wording, which is unemployment rate. That's it. Okay, now for the inflation can be measured by consumer price index or producer price index. Okay, so what is the CPI? Simply, let me give you an example because we just have a 5 minutes until the news is released for the CPI. So it's important to understand what is the CPI. Okay, so CPI in a very simple way. Let's assume, guys, that we have gone to Walmart. Okay, I'm just trying to give some examples from USA, but anyway, you went to Carrefour, you went to Walmart, you went to any shop, any groceries, and you had a basket, okay, that we put our groceries in, and you just put three items, X and Y and Z. All of these are consumable goods, okay? This was at $100, this was at 120, this was at 150, right? So you went to the cashier in order to pay your bill. So he told you now the total is $370. Okay. This was in 2026. Now, exactly, you will go to the same place and you will put exactly the same products or the same goods that you have bought last year. Now, what if the cashier told you the price is $400? I bought exactly the same items last year, sorry, and it was only for $370. Now it's cost $400. This means that $30 extra. These $30 extra with a sort of calculations, we can interpret it into a percentage, and this is known as the CPI, which is a measure of inflation. Now, the difference between the CPI and the PPI is simply one is for consumer, and the other one is used by producers. Now, the high impact one is the CPI. Now, PPI is also high impact, but people do not care about it. But CPI, because you are speaking about consumers, okay, and this is a measure of inflation, right? So the CPI is this is how it works in real life. We have 700 goods of baskets now, excluding the electricity and all of these things, the volatile items and the oil. And we are just adding the consumable goods and services inside that basket. And we measure this from one year to another. Okay. So this is the measure of what? Measure of inflation. Now, GDP, if it's going higher, if the GDP is going higher, this means that the economy is growing. This means that the economy is growing. If the economy is growing, your currency is growing. If the currency is growing, this is something positive for your currency and vice versa. Unemployment, if the unemployment is going up, means that your economy is not doing well because people are not able to find job, because you're not producing, because you are not a productive economy. And this is going to have a negative impact on your currency. The last thing is inflation. And here is the confusion. Now, inflation, if it goes higher, it is a bad indicator that the economy is, some people would interpret the inflation is going higher. Okay, that's a bad thing. But think about it like this. If the GDP is going up and unemployment is going down, the inflation is going to go higher. Okay, if the inflation is going higher because of economic growth, that's something good. Okay, now the prices are going to be higher and your currency is going to be weaker. But when we trade, if the CPI is positive, this is a positive on the currency because this is a representation of economic growth, right? Okay, so guys, let me jump to the economic calendar here, as you can see. And we have, I believe we just have 1 minute remaining. So in this 1 minute remaining, I will open the gold chart. Okay, let's see here in 15 minutes. And let's try to see. Let me do one thing. Okay, so as you can see, guys, here we have the economic calendar. This is the CPI, core CPI. So the core CPI excludes now here is the results. The results, it is negative. Negative, right? Now, negative means what? Negative means that the inflation goes down. From the economy perspective, it is something good that we have controlled the inflation. However, this is going to be interpreted on the US dollar as a negative result, which means the dollar should be going, the gold should be going higher. Okay, so, and why is this? Why did we expect that as you can see here, you guys can see the candle, how it looks like. Okay, now the best thing when it comes to trading, you can't identify whether the market is going to continue to push higher on this asset class or not. Simply why? Because we are in a huge downtrend, as you can see. Okay, so the price might continue. I don't know. The price may not. This candle might be just a reflection of the market to the news, and that's it. Now, of course, if you bring the DXY, which is the dollar index, you would see that the dollar is dropping because it's a negative news on the dollar, as we just have explained. Now, this is only the impact of the CPI that's happened in the market, nothing else. This only the big candle, and that's it. Now, when the market opens, you would see more volume jumping into the market, right? So my perspective, okay, and guys, of course, you have the right to do whatever suits your personality. For me, such a trade, it is not worth it because, okay, I just took this and that, then I don't know what's next. Okay, the best thing is you have an overall clear view about where the market is heading to. Okay, all right. So here is now. Now let me ask you guys a question. I want your interpretation. Was this expected or not? Was this expected that the CPI is going to be a negative, which means that the inflation will go down in the United States of America? Was this expected, or yes or no? Yes. Why? Now the reason is why. Okay. I agree with you. It is 100% yes, but why it was expected? Anyone to tell me about this? I would say the war. Okay, perfect. Probably the war, 100%. Now, interest rate probably going down. Now, the reason, if you guys would like to check the inflation, the only thing that you need to do is just to go to the oil, right? You need to go to the oil, okay? So oil on a daily chart or a 4-hour chart, okay, it was in a bearish, bearish direction, which means that, okay, we have been, once the war started, okay, the price was around 120. And then there was some of the, discussions, negotiations here and there. We accept, we do not accept, we will open Hormuz, we're not going to open Hormuz, and so on. And there is a lot of volatility that comes in the picture, right? But at the end of the day, now there was a ceasefire that stayed for some period of time. And then Iran, just in the morning, they said they have shooted or they have bombed a helicopter from US and the US is going to respond, right? Now, this was not reflected here. Okay. Now, for me, I don't care about anything that happened between US and Iran. I just would like to look about the price of oil. It's 89. Okay. It was 120. 120, I should expect that the CPI is high, right? So if we now this date, as we can see here, okay, on April, March, and so on, when the oil prices was jumping too high, if we go to economic calendar and we searched about the CPI on March, okay, so let's search for that here. Let's go to March. Okay. Okay. So it wasn't that bad. Okay, let's go to April. Let's go to April, from 1 April to 30. Okay. CPI also, it was negative. Okay. Now, okay. So the prices went higher. The gallon per oil went higher, and everyone was, screaming on the everything. But they are saying here that the CPI has been reduced. Okay, which I don't believe, but it's fine. Okay. Now, the main thing is that the oil price has actually gone down. The oil prices has actually gone down. And that's why we could have expected that the CPI is going to be negative results, which means it is going to be lower. Okay. Now, the impact of the CPI, as you can see, guys, on this part was very minimal. Nothing happened. Okay. Because now the market is actually being now, if we could see, let me tell you one thing here. It was so positive. Okay, so this entire drop down, so this was on Friday. Where is Friday? Yeah. So this movement here, right here, this one, this was the impact of NFP. Okay, so NFP was positive, which means that the economy is doing well. Now, if you guys going to see that here we have two opposite data. NFP was positive, okay, which means that the unemployment is reduced, right? But at the same time, inflation is reducing. So according to the normal cycle or the normal economy or normal economic situation, okay, the data, okay, it is not something fixed. Okay, it is a dynamic. So you need to see the bigger picture. And now, to be honest, the market is being controlled not by the data. Now, it is all about the geopolitical war or the geopolitical tension that is being happen in the region, in the Middle East, between Iran, Israel, and United States of America. Okay, everything. The price of gold is going to increase or decrease based on these event or geopolitical events. Now, the interest rate, of course, is going to have an impact, but at the same time, okay, we cannot see, we cannot identify or we cannot conclude that the interest rate is not going to be decreased or increased until the war is settled, because now there is nothing clear. We don't know what's going to happen next, right? They said everything is fine, and Trump says everything is fine. We almost have spoke with someone, negotiation and everything, and then the next day he changed everything, right? So the markets does not know where we are heading to. Now you would tell me, okay, in times of uncertainty, it is known that we need to buy gold because uncertainty, right? I totally agree with you, but the market, when there is geopolitical tension, there would be a high probability for a crash, an economic crash, maybe a financial crisis. That's why all of the central banks are selling off the gold reserves that they're having in order to have enough liquidity. Okay, so this liquidity is going to be used in order to take the opportunities in the market, right? Because the gold is the most liquid thing that you can sell and save your money. That's why the gold has almost reached yesterday, the gold has dropped almost, I think, more than $200. Did anyone take a trade of this? Anyone traded the gold yesterday? All right. So this is still the impact of, CPI, and that's it, right? Okay, Paolo. How was it, Paolo? You made money? Was not good. See, what happens yesterday in gold, it was, you know, horrible, I understand. But just one thing, if you guys could see here, this was yesterday. Now, if we have the sessions when you missed it, unfortunately. Okay, so once you see a candle like this is a clear signal that the market is heading to. You know, that's why, guys, I don't know what's your strategy or what you are following, but this is a really a confirmation that there is no more. Because whenever you see candles like this with a huge wick, okay, so the idea is very simple. Okay. Whenever you see, so this candle originally, it was a green candle. Now, this is the importance of understanding the anatomy of candlesticks. It was a candle like this. So buyers jumped into the market, huge volume, right? And then what happens is all of this volume of buyers, they was eaten by sellers. So the sellers, whatever volume that you have bought, okay, sellers brought this to make it like this. So all of this sellers. Now, originally it was buyers, but the buyers couldn't even push the price one single dollar higher. And they ended up having like this. Now, the best thing as well, that when the market opens and we are reaching the high of any session. So this was the high point of any sessions, right? There is nothing has able to cross or to break the highs of all of the sessions, including Tokyo, including London, and so on. So as you can see here, okay, nothing was broken. Okay, and as you can see, this confirmation here that guys, we're sorry, buyers, you are kicked out of the market, then of course you could have sold and take this in the market. That's definitely something that, okay, whenever you see this candle like this, or whenever you see a candle like this, okay, especially when there is a volume in the market. So there is a big volume in the market. Okay. Whenever you see something like this happens, you immediately buy. Whenever you see a big volume and something in this happen in the market, immediately you have to sell because this is the best confirmation to get. Okay, I didn't do any analysis yesterday, to be honest. I just saw this and I decided to sell. Okay, it is not 100% guaranteed, but this is what the candle is telling you. This is what the candle is telling you that the buyers are kicked out of the market. Okay, all right. Any questions so far? Any question, guys? All good? Perfect. Okay. Now, as I mentioned, um, if we want to have or to interpret or to know the market direction with confidence, this is impossible. Okay. Impossible. Okay. You just, I do mean here by confidence that you do your own analysis, you do your work. Okay. You draw the trend lines, you know the support and resistance, you study the pattern of the candlesticks, and you decide, right? But the data, it can sometimes be contradictory. Sometimes the market, I remember one day last year when the Central Bank of Japan decided to increase interest rate. Do you guys remember that day? For the first time, the Central Bank of Japan has increased the interest rate. So as a trader, what should I do? What do I understand when the interest rates are increasing? The demand on the GPY is going to increase, right? So an asset like this, which is USD JPY, should I buy or should I short? Should I buy or should I sell? This currency has increased in the interest rate. So what should I do? I should sell because I will be selling USD, which means I am buying JPY, right? What happens in the market was horrible. There was a big candle like this. How did the market respond to this? I don't know. Till this day, I don't know. I can. I don't know when exactly this happened, but let me show to you USD JPY. Okay, this was on the last year. I think we can identify this from the chart. Okay, I think it was this one. You know, something was like this. And this was interest rate decision. Okay, so I was trading on the 30 minutes time frame. It was horrible, guys. You cannot imagine that I didn't till today, I didn't understand what happened because it doesn't make any sense. I know that if interest rate goes higher, okay, we should buy the currency that is going higher, right? It was horrible. Completely opposite to the directions of anything. Okay. So I don't know where is it, but anyhow, then it dropped through the floor. No, it didn't. It didn't. It took a lot of time. It was going up, going up, going up, going up, going up. It continued to go up for a week. Okay. And we didn't, me, myself, I said, okay, let's sell. Okay. Let me show you the date when the Bank of Japan increased interest rates. That was December 19, 2025. Okay, so let me show it to you. So we have December 19. That's one. Here it is. Here it is. Okay, so imagine this was, you know, it went all day. Okay, it was going higher and then it started to drop. Okay, so I thought it might be only this two candles and so on, and then it's going to drop back. So a lot of people started to take position, sell, 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 because it does not make any sense. It continues to push higher. Okay, and it remained higher for period of time and then it dropped. Now, in some currencies like CHF, JPY, CHF, JPY, it continued to push further higher, okay, on the same thing. So sometimes you cannot predict the market direction with confidence because I don't know how the market is going to respond. I don't know how the market is going to respond. Okay, so the best thing is that you need to understand the overall picture. Do not focus only on the CPI. Do not focus only on the NFP. Do not focus only on the GDP. The best thing now, combine all the US economy data like 2 months back. Try to research about the GDP, try to research about the unemployment, and try to research about the inflation. Try to figure out an overall view. Because let me, guys, you ask you a question. What if we do have GDP positive and we have NFP or let's say CPI, which is positive. So this is what? These are two information that are aligned with each other. Okay. Now the GDP is positive, which is a good on currency. CPI is positive, it's a good in currency. Now, what if the CPI is negative? Now, there is two directions here. One positive on currency, the other one is negative on currency, right? So what should I do? Tell me. What is your overall response to that? If you have the GDP and the CPI on the same day, what you will do? Anyone can answer me. Wait and see. That's perfect. Wait and see, 100%. Okay. Now, most of the time, according to my experience in news trading, I have not been trading news for a long period of time. I stopped that. Okay. Whenever there is the bigger picture of the market which is the strongest economic indicator that we have is the GDP. So I stick to the GDP, right? However, it is not always gonna work because the best thing is just leave the market, do whatever you want. You want to go up, you want to go down, you want to go up and go down, do whatever you want. After the market is stable, now calm down and decide where is your trade is heading to. Okay, so that's why most of even prop firms they say you cannot trade before the news 5 minutes and after the news by 5 minutes because we need to absorb the market, leave the market absorbs whatever it absorbs, and then if you would like to catch something, okay, or you know the direction, then take it, right? Because they're trying at the end of the day, they are trying to protect you from losses, and I think this is something that is really important. All right, guys. From my side, I have nothing else to speak about. Okay, so avoid the traps in trading by just following the data blindly because the data, it is just one piece of your overall trading plan. Your trading plan is much more detailed than one piece of information or one piece of news, regardless of it's important or it's not important. Okay, the best thing, and if you would like to, I would say gamble on this news, have a sub account. Don't put a stop loss. If you are willing to risk $100, put them in one account and sub account, trade with the sub account. Either you double it or either you lose it. I don't recommend to do that because this is not professional, but this is one way you can definitely have it. Can I get the recording from the last session? Isn't is it shared with you guys on the emails or in the community? Because if it's not, then I will tell the operation team to upload it. Okay. I will tell the operation team to upload the previous recording for the sessions. And the last session, please, of course. Of course, I'll let them upload the recording because they should have uploaded them on the community, on the webinar sections. So I let them know this. Thank you so much, everyone. No questions? Anyone would like to ask me anything? Any questions? If no, then we can conclude here. I'm done from my side. Thank you, Rachel. Thank you so much. Have a lovely day, everyone. What are the session indicator that you are using? This is my session indicator. It's called Session Viewer by Yokowish. Thank you, Dan. Thank you, Dan, for your kind words. Thank you so much. Market Session and Viewer Panel by, I don't know what's the name, Yokowish. What will be the impact from today or maybe none? Then the impact was only this candle, as you can see here, this one, this candle here, right here, and that's it. Now, because the gold is heading into a very bearish trend, so the CPI, even if it's negative, it's not going to be having anything. This was only the impact, and that's it. Nothing else. That's it. The Nothing more. Because as you can see, the market responded, okay, and then normal, I will continue in my direction. This was only a one reflection to the good news on gold and bad news on, or the negative news on dollar. But then the market, I will go into my direction. Yeah, Okay, so all of them, even core CPI, CPI, and so on, all of them are, same thing. You just focus on the CPI. For me, it is over. Okay, it was only this impact reflected on the gold, and then the market will continue in its direction. Any more questions? My pleasure, Carlet. Any more questions here, guys? Thank you so much, guys. Have a lovely evening, and hope everyone had a profitable trading day. So New York session is going to open after 35 minutes, so get prepared. Thank you so much and have a lovely day. Bye-bye. Thank you.